Palantir stock is down around 20% from its 52-week high. So naturally, investors are wondering, is now a good time to buy? In this video, I'm going to answer that question. Hi, my name is Rick Orford, and I help investors like you make informed decisions with your money. I've been trading stocks and options since 1999. So that means I've had my fair share of bear markets, recessions, market corrections, and pretty much everything in between. And if experience has taught me anything, growth investing works well when you focus on quality companies during temporary pullbacks, like what we're seeing right now. But before we get started, I wanted to give a shout out to our friends at The Motley Fool for sponsoring this video. The Motley Fool provides investing insight and stock recommendations for investors of all skill sets and risk levels. So I'm excited to partner with them to bring you 10 stock picks from Stock Advisor. The average stock pick inside Stock Advisor is up 819% versus 158% for the S&P 500. You can scan this QR code or check the link in the description to get your 10 stock picks right now. So, who or what exactly is Palantir? Well, back in 2003, Peter Thiel and Alex Karp, among others, founded the company focused on developing anti-terrorism software after 9/11. The name Palantir comes from Tolkien's Seeing Stones in Lord of the Rings, which are magical artifacts that allow users to see events in the past or those happening far away. Pretty on the nose for a data analytics company, right? Well, fast forward, and the company went public in 2020 through a direct listing, and since then, it's had its ups and downs, but has generally moved higher. By the way, the data used in this video is powered by Barchart. Stop wasting hours looking for stocks. Barchart lets you find data on thousands of tickers and allows you to filter by price, volume, sector, and more. So you can find winning opportunities in seconds. I use it every day and you can too. Just scan this QR code or click the link in the description to create your own free account and start screening for stocks like a pro. So Palantir has 4 main software platforms. Number 1 is Gotham, which is primarily used by intelligence and defense agencies. Foundry, which is the company's enterprise data platform. Apollo, which is its continuous management system, used in some of the most regulated environments. And finally, we have AIP, or their artificial intelligence platform, which is Palantir's newest offering. And this integrates, well, obviously AI, into different businesses across different sectors. I think it's fair to say that Palantir is unique because it maintains deep connections to government agencies while continuously expanding its offerings to commercial applications. In terms of their financials, Palantir's yearly and quarterly revenue increased by 29% and 36% year over year, while its net income for the same period increased by around 10% and 16% respectively. So yes, they've finally achieved consistent profitability after years and years of losses. However, there is a 500-pound elephant in the room, and that's their valuation. Now, the most common way to value a company is with their price to earnings ratio, or the PE. Now, PE is calculated by dividing the company's stock price by its earnings per share, and the resulting figures show how much investors are willing to pay for every dollar that the company earns. Now, let's take another company, Microsoft, for example. This company trades at 29 times last year's earnings. But in Palantir's case, it currently trades with a PE of 750. In other words, investors are paying 25 times more for Palantir than they would for Microsoft. It's almost as if the market is already pricing in massive growth for many years to come. But is that justifiable? Well, I'm not sure right now. For a better analysis, let's examine the bull and bear cases for Palantir, and I'll start with the bear case. Now, when it comes to Palantir, skeptics usually point to 3 legitimate concerns for the company's current setting. Number 1 is its valuation. Like I said earlier, it trades at 750 times trailing earnings, which is nothing other than astronomical. Based on those numbers, Palantir would need to perform almost perfectly for years to justify its current price, and any stumble could trigger a huge correction. And that's a really good point, okay? The company's dependence on government contracts is also a big concern because government contracts can be a double-edged sword. One, they provide stability for the company, but they also position it to be vulnerable to budget cuts or even geopolitical conflicts. In fact, over 50% of Palantir's fiscal 24 revenue comes from government contracts. So I'd say it's reasonable for many to be skeptical about Palantir on this alone. Another is competition within the AI sector. Now, almost every single major tech company today is pushing their own version of AI in one way or another. Most of this competition, of course, comes from the Magnificent Seven, which includes Microsoft, Amazon, Google, and Meta. And that's not to mention all the numerous other startups that's developing their own AI solutions. But the Magnificent Seven alone has greater resources than Palantir. So there's a really good chance of them catching up to Palantir faster than Palantir can do themselves. However, just as there's two sides to every pancake and a buyer for every person selling the stock, many consider Palantir's recent pullback a compelling investment opportunity, and this is probably why they believe its high valuation could be justified. First, Palantir isn't just riding the waves of AI. Instead, it's one of them that forms it. AIP is now gaining traction within organizations who can't implement AI effectively. And right now, Palantir is one of the few that offers the infrastructure to integrate AI into their existing systems. And this could be a potential runway for the company's future growth. Next is that Palantir has a solid moat. Government contracts are known to be difficult to win and even harder to lose, especially in the defense and intelligence sector. But guess what? Palantir's solutions are deeply integrated into national security operations, which means switching to a different provider could potentially cost the government a lot of time and money. So it'll likely stay that way for years to come. Not only that, NATO recently bought Palantir's Maven Smart System, which is called MSS, for employment within NATO's Allied Command Operations, or the ACO. If this works out well, what's to prevent other NATO members from buying the same system? And of course, we can't forget about Palantir's expansion into commercial sectors. Again, government sales provide stability for the company, but of course, many believe that another growth catalyst is Palantir's expansion into other industries like healthcare, finance, manufacturing, and so many more. The expansion is also happening quite rapidly. Its US commercial revenue, for example, increased 54% year over year in fiscal 2024 alone. Now, after weighing the pros and cons, I think Palantir is a speculative buy, kind of like buying Nvidia perhaps in 2020 or Amazon right after the financial crisis. Palantir has some of the highest revenue growth rates among its peers, despite being relatively new in the market, and that says a lot about its future. And what about its astronomical over 750x forward PE? Well, the truth is, traditional valuation metrics often fail for tech companies in their early stages. And I think that this could be the case for Palantir. Amazon and Meta, for example, well, they also traded at astronomical multiples not so long ago. Now, if you believe in Palantir's long-term plans, then I'd say building a new position right now could be a good bet. But this is a very volatile stock, meaning there's sure to be more buying opportunities down the line. But what do you think? Do you own Palantir or have any questions? Or maybe you have a suggestion on a topic that you'd like me to cover for a future video? Let me know in the comments below and leave a like while you're at it. It really will help out the channel a lot. So that's it for me today. Thanks so much for watching, and I'll see you in the next video.